I want to ask if you've done your taxes already, but we always go through this parliament.
Well, the fact is I have not, because I've extended to October.
Okay.
As anybody with K-1s and a complex tax return typically ends up in that situation.
Well, I'm glad you went there, because this gets to the idea of why people do put off doing their taxes.
Yes.
You know, is at least one person on this set, not named Scarlett, who still hasn't done their taxes. And, you know, a lot of us do kind of dread it, because we are worried about how complicated things are. Or, of course, if we owe money, we kind of want to put that off as well here. I mean, what was your kind of experience in dealing with people and clients and just the users of your product?
Well, here's what it is. People think a lot about taxes just coming up to April 15th. Mm-hmm. But they think about last year's taxes, and there's nothing you can do at this point. Mm-hmm. So this is the opportunity, while you're thinking about taxes, while you're feeling this year's pain, think about next year. Set yourself up, your investments for this year, for 2024, such that next April 15th, it will be less painful.
Yeah, you're already 1 quarter into the new tax year, so you may as well get going, right?
Get going now.
Okay, so I have a question about, I'm going to rip up the script here, because you mentioned that you are postponing filing, or no, you're going to file, but you're not going to officially file until October.
An extension.
Right.
Yeah.
So by filing an extension, there's a lot of concern that perhaps that makes you more of a target for being audited. What really are the risks of filing an extension?
The thing that makes you more at risk of an audit is complicated investments. But why do you extend? Because you have complicated investments.
Exactly.
I'm still waiting for K-1s. I'm still waiting for a number of things that will not be available until the summer. But I'm in an unusual situation. Most people have everything they need, should file by April 15th. Mm-hmm. It's not hard to do, and get it out of the way so you can start planning for next year.
Well, planning, though, that's a good point, too, because, and my accountant always reminds me of this, is like why I only call him on, like, April 3rd, and I don't call him in February or in December and the months prior.
And I bet your dentist tells you to brush your teeth, too, and you forget that one as well.
Yeah.
You know, here's the thing. It's a should-do versus a must-do. Preparing and filing your taxes is a must-do. Mm-hmm. Planning is a should-do. Mm-hmm. It's worth a lot of money if you do it. No one does.
So one thing that I think people are going to be surprised by this year, I was reading that the downside of high-yield savings accounts is that a lot of people are going to face a higher tax liability from the income that they earned through these accounts, and perhaps they're not quite ready for that. Does that mean that they're going to be, I don't know, in a different tax bracket entirely?
Well, here's the thing. For your cash, there are different strategies for different asset classes, but for your cash, bank accounts and CDs are the worst place to put them, because there you get the very highest tax rates. Mm-hmm. If you're a high-income taxpayer in New York City, you're going to have 13.5% state and city tax, plus the federal, and that can take you up to 54% marginal tax rate.
On the interest that you earn in your bank account.
On the interest in your bank account. And so if you're making 4%, you're not. You're really making 2%. You're not even keeping up with inflation.
Then what should have been the alternative? What should have been the choice people should have made?
There are many, but the one I like is short-term treasury bills.
Mm-hmm. Yeah.
If you are in a high-yield savings account today, you're going to get about 4.5%. T-bills are 5.3. Mm-hmm. And even more important, Treasury bills are exempt from state and city taxes. Mm-hmm. And so if you think about that for somebody, once again, who's a high-income taxpayer in New York City, that means the tax equivalent yield is close to 7%. Mm-hmm. 7% on a investment that is as safe and secure like as they come.
Yeah, and that gets to the idea, given how elevated rates have gotten, and if you believe that at least baseline rates are going to stay where they are for quite some time here, I think a lot of people have strategies right now that are probably a little outdated.
Yes.
Yeah.
Yes. People have not adopted to the new era of higher interest rates. Yeah. And not only have they not moved money from checking accounts into high-yield savings, but they haven't even started to consider the tax impact. Mm-hmm. And most individuals, they don't even think that it's possible to buy treasuries.
Right.
But it is.
Right. Absolutely.